Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this December 6th. So kicking off the second day in the trading week brings us to yet another down day in the markets, and it was a pretty decent sell-off. So we basically had a sell-off yesterday, which let us basically collapse back under the 200 daily moving average on the SPY, and now we saw some secondary follow-through confirmation close below that daily 200 moving average. So the fact that now we've had a secondary close below that 200-day moving average after a very strong attempt in getting through that is a little bit of a bearish signal to me. Now we have had a pretty sharp sell-off from 410 down to this level, so there is the potential that we start to maybe get a retrace back to this red trend line. You can see we broke it over here and pierced through that. But maybe we consolidate for a day or two before heading a little bit lower. You do have some support levels coming up. There's a major pivot over here. It also intersects with this consolidation bounce over here. So that would be a good intraday level alongside with this level down here, which is in your red bar sell-off, mixing in with your chop, and then your breakdown before gapping through it. And ultimately there is a pretty strong pivot point down here. So you do have support temporarily on the S&P 500, but I'm not very confident in this overall market. You do know that my bias is still to the downside, but yes, there may be intraday bounces off of these key support levels. But the big level that might be worth trading long on the SPY or buying some specific stocks to the long side is if we get a retrace back down to this trend line. I'm still optimistic that it coincides with a technical gap fill and a retrace down to this 370 mark. That would be a pretty big level if we get a decent sell-off continuation into that level to potentially swing long. Overall, I still think we have to come all the way down to here to test this major pivot, and then the longer term picture probably in 2023, I still think we're going to break out this low and head down to the pre-COVID high. I still think that has a massive unfulfilled level due to the fact that we pulled so much forward PE from the future with the printing of money, increasing the monetary supply by 40%. The fact that inflation is going to remain sticky is going to prolong this bear market. And it's just beautiful to see that the likely scenario of the next turn in the market is occurring right before our eyes. Just like we bounced over here and you had a massive sell-off, just like you bounced over here, had a massive sell-off, and just like you bouncing over here and now starting to sell off. Now, there is the potential that we can still trade in and around this original consolidation range, but the longer it takes and starts trading below this 200-day moving average, I think the more susceptible it is for that continuation move to the downside. Let's take a look at gold. Gold took a little bit of a pause day breather after that big sell-off. So the big question is, it's still too premature, but what type of pattern do we get now? Is it going to be bought back up, or are we going to get this flag consolidation sideways pattern, which could point to lower prices? It's really too early to tell right now, but you did have a pretty strong move up. Basically, you had a strong move up into the 200 daily moving average, and you can see it is massive resistance. On the weekly chart, it'll be nice to see how gold finishes. If somehow gold engulfs this candle here, that would be extremely bearish by the Friday close. Let's take a look at the WTI. Oil had some interesting price action. Once again, oil's hitting support, but remember, because you bounced here and you had a minimal bounce, this level is much weaker. So the bottoming tail still is technically intact, so you could buy this as a swing long and then just have a stop loss basically right at that wick low. So I still have it priced in that oil is going to be going much lower. Well, I shouldn't say much lower. I have a big level around the 65 or 66 level, sorry, $66 level. It's just so happens to coincide with this previous pivot, this pivot breakdown before the COVID high, and then your original pivot really before this was the final washout before the war run started to occur. So I still think that there is oil downside. I think that we're going to continue to see the White House release reserves from the Strategic Petroleum Reserves, which is obviously a headwind for gold. But the moment that stops, I do think that that would be the catalyst to go long. You know, the technical picture, maybe when we hit this level or lower, will be the fact that the White House is now starting to stock their SPR. But we'll just have to wait and see how that price action comes. But the overall negative bias in energy is really reminding me of previous cycles and how once the energy sectors start outperforming or start to underperform the market, that's your big signal that the next sharp down leg in the market is coming. And often when energy switch from the leading to the lagging sector, that is yet again another major signal that you should not ignore, because if you look at the '08 crisis, energy topped way later than the S&P 500 in tech, but energy beat the S&P 500 in tech to a bottom. So it just shows you the fear that can precipitate in this commodity-based sector based off of major weakening global demand. And when you think about it, you know, the last 10 years, we haven't really had or 12 years, we haven't really had many major corrections other than 2018 and 2020, which were both very short-lived. And when you think about the numbers that people are used to projecting for the demand of energy, the consumption, it all comes on the back of demand that is from quantitative easing cycles and artificially low interest rate cycles. So you really can't say that the last 12 years are a good guide for consumption and economic demand when that money, when the demand has been stimulated by basically debt and credit. So it doesn't give you a true sense of what the people need. Many people have been living beyond their means, and I think that's what this cycle is going to be proving to a lot of people. The dollar, the DXY, has had a tremendous bounce. You can see here, it is into short-term resistance. You can see this trend line here, but it is trying to recapture that 200-day moving average. If it can recapture and get above that 200 moving average, then you likely get a float up to this 106.80 level, and then we'll just have to reassess from there. I'm still in the camp that we could see a little bit more of a bounce in the dollar, especially if the indices really start to see some panic sell or if inflation moves higher than expected come next week. Looking at the 2-year yield here, so the 2-year yield really hasn't given us that signal. You have recaptured and held this original neckline pattern, but you have not confirmed above that wick high, so therefore this pattern is still technically intact. But once again, it's kind of 50-50. It can go either ways, and that being said, a 50-50 trade setup is never a good call. So we just have to wait for more data. We have to wait for that daily close or daily close below this line to really make a definitive assessment of where yields are likely going to go. We did pick up a couple new trades today, so but we also want to say, first off, congratulations on the 2 short trades that we covered. AMD was one of them. Basically, we shorted at the 78.21, just covered it right down here above $70, so a beautiful double-digit gain. We also took profits on our BAC short. You can see we covered that right around here. I was hopeful that we were going to get a retrace back to this breakout zone right around this gap fill around 31.47, but just due to the massive sell-off that BAC has had in the last 1, 2, 3, 4 days, and now that you are into support, I do think that it was wise to at least pull some profits off. You know, in the event that it bounces, we can always reshort it. But I do think that it's a little short-term oversold, even though I do expect it to go lower. We still have some bank exposure short through JP Morgan, so I'm fine with holding that. XLE is an interesting sector. So once again, when I say the leading sectors, which is energy, are now switching to big underperformers, you can see XLE has clearly triggered this beautiful rollover pattern, topping formation, and you got the confirmation. And the beautiful thing about this is you've actually pierced the daily 50 moving average, and you're closed below it. So the big question is, if we get a 3-bar surge now and actually really confirm the breakdown below this 50, then it likely means we float all the way, or we fall all the way down to the 200-day moving average. Now, what I'm looking for next tomorrow is, we originally got the breakdown, so the potential is that we could retrace all the way back up. There's always that potential. Patterns like to retrace to the breakdown zone. There is going to be some resistance at this pivot, so maybe it's even just a minimal retrace back up to this pivot before we roll over. My overall thesis, I think it still goes much lower, the energy sector, but there is going to be bounces since it is the leading sector of 2022. So what I'm kind of expecting, maybe tomorrow we get another flush down into the support zone. You can see these major pivot tops, the original consolidation breakout zone. So this is naturally going to be support, and it would be a 3-bar surge to a low with a potential technical bounce all the way up to this area or this area, and then that would give us a beautiful opportunity to cover our shorts down here and then look for a bounce and start to short again the energy trade back up here. So that's just one scenario that could, or a couple scenarios that could play out, and kind of what I'm keeping my eye on. But if we get a 3-bar surge flush into this level, I may start to pare back some profits on the energy shorts that we have on the table. And we're finally starting to see the likes of Valero and XOM come deep into the money, Coterra Energy, so Hess, you know, there's a variety of energy shorts that we're exposed to, which is pretty good. I just want to take a look at SNY. So we have been shorting this one. Basically, we gave you short levels, a few different short levels, and it hit all the way up to our second short level, which on the daily chart just so happened to be around the 49.73 level, which was this technical gap fill up here. Let me just put the line, and you can see it filled that technical gap to a beautiful perfection, almost a penny. We executed the short up there, and then we also accumulated a short at 49.06. So it's good to see that both of our short trades here are in the money. We're actually in the money on this trade anyway. And the reason why I wanted to short Sanofi is we were basically playing Sanofi long. And I remember when Sanofi was just getting no bids, no bids, no bids, and then it caught this massive bid. There was an inverse head and shoulder bullish pattern. But Sanofi has had an impressive run already. I mean, if you look at this move from 36 all the way up to 46, that's a $10 move in the stock, an exceptional run. And then when I saw the blow off top today, I actually had an alert set which triggered me to look at Sanofi, because I knew if this got a big pop, then it's likely a very, very good short candidate. And the news came on the back that the Zantac lawsuit, which caused this collapse, basically has been resolved, and Sanofi and GSK, GlaxoSmithKline, are no longer liable for the Zantac lawsuit. So it was a ruling in favor of both companies, which obviously gave them a final pop. Now, based off of this price action, when you have a tremendous run like this, what this price action tells me is many people knew there were going to be a positive result, and now you have the latecomers coming to the party. And I love that the stock has filled this big technical gap. Even if I draw this trend line, this is the thing that amazes me. These trend lines are truly, truly spectacular. Let me just see if I can put on the after hours extended trading, events trading. Just give me 1 second. No, I can't put it on that time frame. But there's a massive, massive trend line here, which basically is what you hit. That's the trend line. So you can see it connects your major pivot to your major pivot to major pivot, your major pivot breakdown zone, and you retrace to that trend line technically perfectly with a coinciding gap fill in an extended move. That is a triple factor trade, and this is why we are in the money on this trade already. I actually did day trade this myself as well, got over $1,000 plus a beautiful healthy swing trade position in the money. So again, I always love it when a stock has had a tremendous run and then you get a piece of news that just sends it to an even more overbought condition, and that gives us a perfect short level off that level. We also did pick up a couple longs. Basically, despite my sentiment for the market is that we head lower, there is still the potential for always a bounce, and there are some stocks that are at decent levels. MULN's a high risk play, but basically MULN, one of the reasons I'm picking MULN up is if we flip to the weekly chart on MULN, I remember MULN had this beautiful run here, this impeccable move over 100%. I did play this a little bit personally, and then it went through this big, it went over here, it had a beautiful run, and then it went through a multi-week dilutive share phase. But now it brings me to the fact that you're basically trading at the low of this symmetrical channel. And this symmetrical channel has a high all the way in 2012, 2014, a low in 2015, a low in 2015, and a high in 2021. Charts like to move in symmetry. So what this means is since you have 3 pivot highs on the top of this perfectly symmetrical parallel channel, and now you have 3 pivot lows at the bottom of that channel, the chart is therefore ready on a technical basis to start making and look for potentially setting a higher high. Now, I'm not saying that this chart is going to go all the way up to 985, but I'm just saying the fact that we're at the low point of this symmetrical move in an oversold condition, and you can argue that you actually have this inside bullish move. If you flip to the weekly chart, you can see this is where some accumulation took place. This is a weekly, little bit of a doji signal on the weekly time frame, which is still technically holding as we speak. And the beautiful thing is you tried taking out that doji, but you've bounced off of that beautiful long-term parallel channel. It just shows you that people are waiting to buy off of this technical level. And since we've had a beautiful gap up and a beautiful inside bar consolidation pullback, this is a prime opportunity to pick up and accumulate at these levels, because I think at the very minimum, MULN has a shot of going up to this technical gap fill at 25 cents, and then likely even higher if it gets in between that. The cool thing about this pattern too is, let me just throw up what I am seeing. So if we look at MULN here, MULN is actually trading inside of a downsloping wedge pattern. Obviously this is the one line over here, and this is the other line downsloping here. The one thing I know about downsloping wedge patterns is that they do favor a move to the upside. And typically this is the range that in a basing formation, stocks love to base in and create a base by trading up to the top of the wedge and then back down and then back up to the top and then back down till ultimately they have a favored move to the upside. So MULN can still chop in and around this range for quite a long time before it eventually has an inevitable likely breakout to the upside. So I mean, and that kind of correlates if you look at where the overall end of the wedge is. It's all the way in 2023, where a stock like this may have the opportunity to finally make a breakout if the fundamentals and conditions improve. We also added Grinder, so GRND. Basically, Grinder, I've had my eye on this one, and it's good to see that it's had a pop off of our level. But the reason I added this is inside of this beautiful reversal candle, and if we flip on the volume chart here, you can see Grinder had an amazing record day of volume here, around 5.14 million, a massive level. And the last 1, 2, 3, 4 days of price action have all been inside of this green candle. So what this is showing me is that this is still the technical reversal level. We have a low to trade against. If we got a daily close below this wick here, then we exit Grinder. But Grinder is putting in bullish consolidation. Even if we look on the intraday chart, this is all a healthy intraday accumulation pattern. It's not making any drastic moves to low, but people are slowly buying it up as it hits that key technical level. You can see that we had it bought up over here, it fell again, it was bought up, it's fallen again, it was bought up, and now it's fallen again, and it looks to be getting bought back up. So this is a stock that can pump pretty quickly here. I mean, it did have a crazy IPO price taking over a SPAC here, pumped all the way to 71. I tried shorting this when it actually IPO'd, but basically there were no shares to borrow. But this is a healthy price action, and we could see Grinder easily move up to this $8 level, just over $8, which would be an impeccable gain. I mean, if we sell at $8, we're talking about a lovely 34% swing trade. So very high risk, but nonetheless there is accumulation, inside bar bullish consolidation as well occurring. Really, that sums it up for today's video. It's a little bit more of a shorter one, but congratulations on the trade. Let's keep banking this market, and let's start removing shorts, slowly removing and covering shorts as the markets trend lower.